Chipotle just announced a 50-to-1 stock split. Stock is up 3% or $88 on that news today. Wow, this is the highest split count I've ever seen, that's for sure. In recent years, we've seen Tesla do a 5-to-1 and a 3-to-1 stock split. We've had, Amazon and Google both do 20-to-1 stock splits. But this is the first 50-to-1 stock split that I've experienced. So shareholders are going to vote on this in June, and they'll approve it. So we do have some time before the stock actually splits here. So although stock splits don't change anything fundamentally, they definitely have a psychological effect, and companies tend to do splits when things are going well. So I'll just quickly go over a stock split, and I recently put out a video doing a deep dive into Chipotle, but I'll just kind of summarize some of my key points there. I'll link to that video down below for if you're interested. But when it comes to stock split, while stock splits don't change anything fundamentally, they definitely have a psychological effect, and companies tend to do splits when things are going well. So if we think of a business as a pizza pie, whether you cut it into 8 slices or 100 slices, you still have the same amount of pizza. The same is true for the share of the company you own before and after a split. You own more shares that add up to the same amount of ownership of the business. So now with Chipotle, it's trading around $3,000 a share, just below. Post-split, it'll probably be around $60 a share, based on today's prices. So for every 1 share you own prior, you'll own 50 post-split. And while you still own the same amount of the company, it can definitely and tends to create an influx of new buyers, because how many regular people do you think are out there that have $3,000 lying around to buy 1 share of Chipotle, or that sounds good to, versus, oh, now Chipotle, I can buy 1 share for $60. Well, now you're talking. This can have tremendous positive effects, and it's also especially helpful for employees that have stock purchase perks. So splits tend to be a good sign of things to come, and I really just see this as the cherry on top of what's already a fantastic business, which again, I recently did a deep dive on. I'll link to that, but I'll just give you guys a quick synopsis. Chipotle is a business that I think is firing on all cylinders. First of all, this is the greatest restaurant chain ever created, not up for debate. They've just been on top of, they've been on the ball. They've been on top of all the trends, like mobile order, amidst a fast changing, both retail and restaurant dynamic that we've seen in recent years, just with the pandemic, but also other trends. Things are just kind of moving to digital. In 2023, 37% of Chipotle's sales came from digital. Now, when it comes to, Chipotle Style, the menu, studies show people do not actually like having a lot of choices. It creates anxiety. And Chipotle has a simple menu. They've got a streamlined process. It's also on the healthier end compared with many of the other quick service and fast food options out there. They pride themselves on only using 53 real ingredients. It's everywhere. It's on all the bags. And when it comes to the restaurant count and really the major growth potential here, Chipotle plans to double their restaurant count long term. As of January 30, there were 3,383 Chipotle locations in the U.S. The CEO has said that getting to 7,000 locations is a conservative target. Conservative, so maybe a case of under-promising here and over-delivering. But in 2024, they're expecting to open 285 to 315 new restaurants. So you're probably going to see a double in the restaurant count in less than 10 years as the efficiency continues to improve. Now, for comparison, globally, there are over 38,000 Starbucks locations, over 40,000 McDonald's locations. So 10 times as many Chipotles. So the company is really just beginning its international expansion. They've opened a few restaurants in Canada. They've got 34 locations in Canada, 15 in the UK, 6 in France, 2 in Germany. So the vast majority are in North America and the US. So tremendous runway for growth there. And then on the topic of efficiency, because how does this restaurant type business increase margins? Well, they can grow the store count, but they can also grow either the per restaurant revenue, but also the per restaurant profit margins. So they've been doing a lot there, getting more efficient. Chipotle restaurants just continue to improve. They're also doing a lot of these Chipotle lanes now, which are basically just drive-throughs, but they carry with them much higher profit margins, right? Because it's the name of the game here is efficiency. So Chipotle locations, they've got some of the industry best restaurant margins of 26.2% as of 2023, and that number is steadily improving. Now, 80% of the new locations will have Chipotle lanes, further improving their bottom line. So I think this is a great stock to tuck away in your portfolio for growth long term. The 50-to-1 stock split to me is just the latest incentive and really just a cherry on top. Now, Chipotle is up 28% so far in 2024, while the S&P 500 is up 9%. I announced I started a position in Chipotle to community members earlier this year. You can consider joining our community below. It's linked in the description. You can sign up through my Substack. And with that community, you'll get access to all my stock and options trades in real time, a community that's home to some 7-figure stock and real estate investors. And we're doing weekly private Zoom meetings on, all things stocks, real estate, and personal finance. So if you're interested, check that out. If you enjoyed the video, leave me a comment below. Let me know what you think of Chipotle. Don't forget to like and subscribe. This is Vinny from the Investment Club. I'll see you guys next time.
Thank you.